Um, Hello, very loving good afternoon to all of you. Today we will discuss again the budgetary part of financial specialization, and I have already discussed the introductory of the budget. I have already discussed the classifications of the budget. I have already discussed the sales budget and production budget. And today we will discuss the cash budget. In cash budget, as we know, the cash budget will provide you the detailed descriptions of that how much cash required in the coming 6 months, that is in short term. And in this cash budget, we will take into considerations that how much cash comes in the business and how much cash is going outside from the business. That is cash receipts and cash disbursement. So, in this cash budget, that is the detailed information of cash receipts and cash disbursement. Disbursement means payment. Payment means outflow. And receipts means inflow. Inflow of cash. So, in this cash budget, now the question arises is that what are the factors which you need to consider at the time of cash budget? कैश बजट बनाने में मुझे किन किन फैक्टर्स को ध्यान में रखने की ज़रूरत है? तो पहली बात यो है, the first thing is in cash budget, first of all we need to consider, just I already told you, that is, first of all we have to have the idea about the opening cash balance. Okay? Opening cash balance, which is must for each and every organization. At least a minimum cash balance you have to have. Moment when you go somewhere in the wallet, you always keep a minimum cash balance. So minimum cash balance, if suppose we prepare this cash budget for January, February, March, suppose 3 months budget we want to prepare. Suppose minimum cash balance of January means this is the closing cash balance of December, and it's become the opening cash balance. Minimum cash balance, this is opening cash balance. Opening cash balance of January means this is the closing cash balance of December. Suppose the opening cash balance is 1 lakh. Sometimes it is necessary that the organization should maintain a minimum cash balance of 1 lakh every month. Okay? Or sometimes there is no such information that, okay, whatever, the minimum cash balance of or opening cash balance of January is 1 lakh. Maybe the February, the opening cash balance will increase, means closing cash balance of January will maybe 1,20,000. This closing cash balance of January become opening cash balance of February, closing cash balance of February, opening cash balance of March, and so on. Or otherwise, maybe sometimes we may say that we will maintain the minimum cash balance of 1 lakh every month. Both of this thing we will discuss right now. Now, after opening cash balance, What else? From which resources you feel you expect that cash will comes in? For this, it's very easy to understand that in manufacturing organization or in trading or in any business, why we do business? Because we want to do business for business. We want to do business, that is, in business we will sell the product. Sell the product, it means what? When you sell the product, the cash will come in. Then in how many ways you sell the product? You will sell the product in two ways. You purchase the product in two ways. Two ways? Two ways we purchase and sell the product? Yes. What is that? One is on cash basis and one is on trade basis. Okay? When you sell the product, maybe 20% of the sale on cash basis and maybe 80% of sale on trade basis in each and every organization. You never find any organization selling a product 100% on cash basis. There is no one. And that is the reason you find always EMI. When you go and buy the bike from suppose Honda, they'll say, no problem, don't pay me 100% down payment. You only give me 10% down payment and the rest off on credit basis. Means every month you pay me 10,000 rupees and in 1 year you will pay all the money. Is that clear? This type of sale is called credit sale. So now after opening cash balance, you should write the cash receipts. Cash receipts means inflow. From where the cash comes in? From sale. Now sale is on again cash basis, cash sale. Suppose for this you have to have the information, past information, that is budgeted, that is sale of suppose January, suppose the sale of November is 80,000, December suppose 1 lakh, January suppose 1,20,000, February suppose 1,50,000, March suppose 2 lakhs. This is the sale you are estimating. You are estimating the sales of November, December, January, February and March. Now you prepare the cash budget. How much cash is required in the month of January, February, March and April and so on and so forth. After, when you are estimating the sale of different months, then you again one question also you have to have. The idea that how much of sale you are estimating on cash and credit basis. Suppose I am estimating 20% of sale on cash basis. And rest on credit basis. Now the third question is, how much credit facilities you want to provide to the debtors, that is to the customers. So now another question, that is credit facilities allowed to the customers. Who is your debtors? Debtors, the person who receives goods, to whom you sold goods on credit basis. That person is your debtors, that is receivables. Debtors is how much? Suppose 1 month. It means if you sell the product in the month of November, Don't pay in the month of November, pay in the month of December. Don't pay in the month of December, pay in the month of January, February, March, and so on and so forth. Is that clear? Now, these are the information which you need to collect. Why? Because you want to prepare cash budget. So after this cash sales, how much cash you want to sell in January? You see the month of January. In January, the sale amount is 120. But how much cash? Cash sale is 20%. So 20% of 120 is how much? 24,000. 10% of 1,20,000 how much? 12,000. So 20%, 24,000. So cash sale is 20% of sale. 20% of sale means 20% of 1,20,000. So 20% of 1,20,000 is how much? 24,000. It means in the month of January, you are collecting only 24,000 out of 120,000. And the rest is after 1 month. Means rest is in the month of February. How much? 80%. So 80% of 1,20,000 is how much? And that is what called? That is called receivables. That is called credit sale. Sale you have written. Cash sale. Cash sale is 20%. Now credit sale. Credit sale means the sale which is the payment is postponed for future. So how much period the payment is postponed for 1 month? So after 1 month you will collect the amount from the customers, that is from debtors. हम 1 महीने का हमने क्रेडिट फैसिलिटीज दी है, तो हमें 1 महीने के लिए रुकना होगा और 1 महीने के बाद मुझे वो पैसा 80% जो सेल का है 1,20,000 का, that I will collect. So here what we should write? Here we should write collection from debtors. How much? 80%. 80% of 1,20,000. 80% of 1,20,000 is how much? 80,000 of 1,20,000 is 96,000. Now you see, 96 plus 24, 96 plus 4, 1 lakh, and 20,000, 1,20,000. It means 1,20,000 you have recovered now, 24,000 in the month of January, and 96,000 in the month of February. Why? Because I have given credit facilities of 1 month. And how much credit facilities? 80%. So 80% of the total amount, 1,20,000, that is 96,000, we have recovered in the month of, collected in the month of February. So for sales, everything is over. Now, from which other resources you will collect the money? Maybe I'll collect the money from dividend received, interest received, and blah blah. So you will collect the dividend, interest received, so interest received. Suppose you have the detail that from where you will get the interest. Maybe the organization has deposited the cash into bank, and the bank will give the interest. How much interest? You are expecting interest. Suppose interest you are expecting in the month of November, suppose 10,000. In the month of December, suppose 15,000. January, in the month of 20,000. February, suppose 25,000. March, suppose 30,000. So in the month of January, how much you will receive? 20,000. So 20,000. In this way, we will add the opening cash plus receipt. Opening cash
plus receipt. A. That is how much? 1,44,000. Now, minus from this opening cash plus receipt, we will deduct what? The cash disbursement, that is payment. Cash disbursement, that is payment. Where you want to pay? You will pay the amount to the person from whom you purchase the raw materials. Who is that person? The giver is the creditor. The person who gives you, who sold the goods, from whom you purchase the goods on credit basis, जिससे हमने उधार खरीदा है, वो कौन हो गया? वो मेरा creditor हो गया. So here is what we will have to pay. Now again, purchase is on two types, that is cash purchase and trade purchase. So payment on cash, payment to the creditors, payment on cash. For here, you have to have the information of purchase. Suppose here is 50,000, 60,000, 60,000, 80,000, 80,000. Again, 20% of purchase on cash basis, and the rest after 2 months or after 1 month. Again the same thing. So cash payment, cash purchase on payment on cash. How much cash you are paying? 20%. 20% of 60,000. 20% of 60,000 is how much? 12,000. And the rest? Payment to the creditors. How much? 80% of 60,000. After how much? Month? After 1 month. That is 80% of 60,000 is how much? 48,000. So 48,000 plus 12,000, 6,000 completed. Means you purchased the goods in 60,000 in the month of January. Out of this 12,000 you paid in the same month, that is cash, and 48,000 you paid in the next month. Clear? The same way you can write wages. Wages, suppose 20,000, 30,000, 40,000, 40,000, again 40,000. Wages lag in payment. Lag means there, delayed in payment. How much delayed? 1 month. So lag in payment, lag in wage payment. How much? 1 month. In the same way, we can say all the expenses. So payment, wage payment, lag. How much lag in payment? Means January's December payment, lag in payment, December, no, 1 month. So December payment you will pay in the month of January. So wages payment of December is how much? December payment is 20,000, 30,000. So 30,000 you will pay in the month of January. This is the wages of December, but you are paying in the month of January. In the same way, you add all these amount. This will give you the total payment. Total payment, that is 32,000 plus 30,000 plus 12,000, 42,000. You deduct from cash opening minus cash disbursement. The amount is 1,08,000. This is your closing cash balance. Closing cash balance of January. And this will be